everyone, and welcome to the Efficiency Engineers podcast, where we ask the question, is there a better way? My name is Frederik Stallard, and in this podcast, I interview leaders in insurance that challenge the industry's notorious reputation of being slow to change and inefficient. On the show today, we have David King. David is the co-founder and CEO of Artificial. Artificial is powering the next generation insurer by making the complex underwriting process frictionless with one powerful automated platform. Underwriting, as we know, has been around for more than 100 years, and like with any legacy business, a lot of inefficiencies have accumulated over time. But innovation poses an opportunity to change things for the better. Today with David, I want to dig a bit deeper, and I want to know, is there a better way? David, thanks for coming on the show. How are you?
I'm good, thank you, and thank you for having me.
Before we head in deep, maybe just a quick intro about yourself, your backstory, and maybe tell us, for the listeners who don't know, what algorithmic underwriting means. It sounds very fancy.
Thank you very much. So my background, I worked briefly at an MGA, and my co-founder briefly worked at an insurer as well. We started the company working on data-intensive applications for large brands internationally. We had a great time doing that, but we were obsessed with building a product, something that we could be really proud of, something that made a difference where it was applied. Because of our experience in insurance and the opportunity that existed there, we decided to double down on insurance. We focused on that. We've built up a client base of a number of London-based and international brokers and insurance firms. We've grown the business to hopefully solve a lot of the problems that our customers are facing and deploy technology very well.
Awesome. So were you really set on doing something in the insurance industry, or was this more like happens to be insurance, but we have a really strong idea and we know this industry needs some help, needs some change?
So it wasn't the case of I hear lots and lots of insurtechs say, oh, insurance is rubbish. There's loads of legacy systems in insurance. We're amazing. We've got new technology. We're going to revolutionize the whole market. I think that's a very naive way of looking at it. I think insurance in general is the superhero of the modern economy. It facilitates almost everything that happens in a modern economy, lots of growth and lots of benefits for society. And they make, both brokers and underwriters make a lot of money. So I think to turn up and say their technology is poor and there are legacy systems and new technology is going to revolutionize everything is, as I said, naive. We approached it from kind of an analysis way and an experience way. So our analysis was very much that there did seem like there was opportunity in fintech more generally. We saw the fintech trend. We thought insurtech lagged behind fintech by a couple of years. We looked at the software providers that were in the market at the time, what they were charging, what their valuations were, what the benefits they provided, what technologies they used, how flexible they were they the kind of their time horizon to deploy more advanced technologies. And then we looked at our own experience of maybe integrating with large insurers, running reports, getting data out of things, making decisions. When you put all that together, and a massive oversimplification of it is, I think underwriting and insurance is a great use case for taking more data points into account in order to make a more accurate decision. So not just for an individual submission. So if you receive an individual submission, the more that you know about the risk, the better you can understand it, the better you can price it, but that aggregates. So when you've got a portfolio of a number of different submissions or policies, but also across a broad range of products, then the data hopefully is the differentiating factor, and humans very much need to leverage technology to make accurate decisions, because the data points just get so large, or the number is so great, that there is no human that can make those decisions at the scale. So I think on an individual case-by-case basis, especially on complicated insurance, you apply the experience of individual underwriters to it, they're going to add so much value, especially if they know the customer. There's kind of intricacies that they can get under the hood of, that they can know that nobody else can know, because those kind of insights are dependent upon the relationships they have. When you aggregate that across a large enough set of policies and products, that just cannot hold true. I would say it's impossible for you to have a portfolio internationally for billions of pounds of premium and one human or one collection of humans, because you have humans collaborating run into their own challenges of the number of humans that are trying to collaborate and agency problem and all sorts of things. That's where I think technology can be applied. So if you kind of put all of these different factors together, and as I said, that was married with the fact that we wanted a product, we didn't want to be across multiple industries, so we thought the analysis held true, the market size was large enough, we both had experience in it, and it's really exciting for some geeks to apply their knowledge and technology to. So that's why we got into insurance, which is probably a much longer answer than you expected, but hopefully answered the question.
Oh, this is great. It's touching on a lot of points. And I mean, if I can summarize it, it's this kind of trend where big data is only becoming bigger and decision making is becoming more complex because of it. So you're dependent on computers to do some of the calculations that you wouldn't necessarily be able to do yourself. And this applies to many industries, but it's starting to apply more and more to insurance, where decision making has always been kind of complex and data driven.
Absolutely. And we're just talking about the number of data points here. We're not talking about how you get them, which I know that's very much where you come in, and your business does a fantastic job of. That data exists in unstructured formats and multiple different unstructured formats. So there's a barrier and a curve that you need to go up before you've even got the number of data points that you can then analyze to make decisions.
I love how you mentioned that insurance is like the superhero industry. It's kind of the like battling the image that insurance is dealing with, as opposed to many other industries or people that are not really aware of how it's going. I was at a conference recently where we got to talking, and someone mentioned insurance is probably the last and the only industry that is still so human centric. Like, it's, in essence, it's human to human relations, and this is something that has already changed in many other industries. Think about retail or e-commerce and so on. Of course, you still have human to human, but in insurance, this is the actual core business. It's fundamental to how insurance is sold, is bought. Do you see this evolving then with algorithms being more front and center in the future? Because we're only getting started, right? Do you see insurance becoming less relationship based?
So there's two answers to that question, and it made me realize that I didn't answer your previous question, what algorithmic underwriting actually is. So if you think of kind of algorithmic, automated, bionic, all these augmented underwriting, I think they're all terms that loosely describe the same thing, of that a computer or some technology or a platform goes through a process that mirrors the process that the human is doing to come to a decision. Now, for that to be the majority of those decisions to be automated, you need to have access to the data, and I think the data points to make the decision. So that might be the locations of certain properties, the characteristics of those properties, going to different systems to enrich them, doing a sanctions check, pricing, exposure management, putting it in the pricing. And I just don't think it was possible to do that. So historically, it wasn't possible to do that because the systems didn't exist. I'm talking kind of like 100 years ago. It all had to exist in the brain. The brain was the supercomputer platform and pulled all these different variables together and kind of had a best stab at whether that was a good risk or not, and what the price should be and how that reflected the market dynamics. I think you've moved recently to, there are all of these different systems, but there's not one glue that puts it all together, so you can take the data point through a number of different gates and take it from different places to make that decision at the end. And I think that's kind of the inflection point that we're at now. We're going to go through another inflection point, I think, where the computer beats the human, but I think we'll probably come on to that, but that's kind of 10 years time. So I think that's that is algorithmic underwriting. So if I remember correctly, your question was, is the reduction of humans important, or is that imminent, and is that going to happen? So I would say yes, because you're going to have fewer human relationships that are required to get access to large books of business and submissions and put it through that augmented underwriting process. However, when everybody has an augmented underwriting process, how does one company differentiate itself from another? And I think there are multiple factors to that. I think proprietary data that you can help train your models on to give you a difference on the pricing is a massive one. But the other one is when I'm sitting in front of the customer or the client or the broker, how do I get them to use me or my company instead of another insurance company? And I think that you've got kind of the emotional intelligence side of things that are, do you trust us to pay a claim when it's discretionary? What's the track record of the individual that you're dealing with? What is the track record of the firm? And I think all of these factors are relationships. So the relationships are still important. I would say where they are still valid, they are probably more important than they were, but there are just fewer of them.
That makes total sense. While you were talking, I had to think about I don't know, it's a bit of a fun analogy, totally useless for this conversation, but when with drug trafficking, the value of the drugs is like completely correlated to the distance it has to travel. Like valuing drugs is based on, okay, how far did it have to come to get here? And you were saying like with data, of course, today there are already many systems in place. Data is been captured and generated, but it's not really well connected. So getting data from one place to the other, where it can actually be consumed, or where it can be used to create insights, that's when data becomes valuable, because capturing it is pretty useless. And that's also, I mean, where we come in, like we with Paperbox, we can generate sufficient data, but it's as standalone, it's pretty useless. Anyway, what you also mentioned is, this is our proposition today. We optimize certain processes. We introduce efficiency in administrative tasks, menial tasks, so that, for example, when facing a broker, they have more time available to spend with their end customer. They have more time available for what they're supposed to do, which is creating this really great customer experience, very personal interaction, using their emotional intelligence. But the reason why I was asking is this always going to be the proposition, for example, for brokers? Or but I think you answered it. Yeah.
Is it always going to be the proposition, the human differentiation? Is that what you meant by the proposition?
Yeah. So for me, it's probably also going to matter on what type of insurance it is. Simply, like if you don't need an emotional conversation if you just want to close your car insurance, right? You don't necessarily want to be on the phone for 30 minutes having a nice chat with somebody, I don't know, a few 100 miles from you. But maybe for other more complex risks, I think you would want to feel safe, because that's what insurance is about, right?
Yeah, so I think this speaks to the question of, can a human beat a computer? And if we just put that in from an underwriting perspective, I would say right now in simple products, car insurance that you mentioned, where it's a simple product, the data set that's required to make differentiating decisions is available, and they've had enough time to put that together. The answer is yes. I think you would struggle to set up a profitable underwriting firm that makes all of their underwriting decisions entirely by humans right now. And I think that speaks to what is the definition of a computer beating a human. I think you've got probably two things there: expense ratio and loss ratio. Now, the expense ratio in the short term is going to be much lower if you're automating that end-to-end process, and if the data is available, the expense ratio is probably also going to be lower because you're doing the analysis. I would say in the London market, for example, where you've got complex commercial products, if I had to choose one, a computer or a human right now, you would choose the human, because I don't think the products are simple, that not all of the data is available, they've had enough time to change the positioning to do it. So for example, if you only have a computer, you need to receive all the data in a way that the computer understands. You need to know where things are missing for particular kind of bespoke policies. So you've got humans. If you had to choose one or the other, humans win right now. In the long term, I would say computers win. The definition of the long term, probably 10, 15, 20 years. And then you've got something in the middle. What I would say absolutely is the case right now is a blend of humans and technology wins the day. So from both those expense ratios and loss ratios, where the humans are removing all of the, you said menial tasks, but the administrative tasks, the supporting tasks, the analysis, getting the data in the right set, taking it between all the different systems, for example. If the technology is automating that whole process, and the humans are adding their value in the relationships or in seeing what's missing, understanding niche, understanding maybe market dynamics and trends of pricing and different players in the market and what they're doing, for example, that blend very much works. And I think that machine learning / AI, however you kind of want to describe it, is just another tool in the range or in the history of humankind, the technology that's come along and humans have leveraged to improve their performance. I think so. Therefore, kind of that medium term, that inflection point. What are we going to do between now and that future state? Because I think coming back to what I said at the start is that once there is enough data and once you're doing it at a large enough scale, the computer's gonna win. But we're not there yet. So if I was to think about what's going to come next, so if we accept that augmented underwriting is the best thing for right now, I think that moves forward into the medium term where you remove all of that processing value and you have portfolio managers and specialist underwriters that can add value to their portfolios. I think if you look at, I know it's a buzzword or a kind of on trend thing here, but if you look at kind of like chat GPT, if you could, and proprietary training sets for data. So if you could train your own model that you could interact with about what is in the policy, and it could arrive pre-assessed in front of a portfolio manager, and then they could query certain elements of that, and over time they could automate those queries into kind of augmented / algorithmic rules to make the decisions. But let's say they turn up in their office at 9 o'clock in the morning, maybe 7:30, because they're very keen, and then they can have an interaction with an AI assistant or ML assistant that says these are the characteristics of the different submissions that arrive. You can query it to understand different parts of the submissions, but then you can also kind of do some what if analysis of, well, what if I was to accept these three? What if I was to decline those two? What if I was to change the pricing on some of these? What if I was to change the parameters of the algorithm? And then I think that's super efficient, and that's where the humans add in the most value. And there does become an inflection point there when the algorithm all of a sudden one day turns up and says, well, actually, if you change the portfolio or some of the rules to this, you would have outperformed considerably over the last period, and going forward, this is what you're going to do. And I think that inflection point, you don't come back from that. So let's say that happens in 10 years' time, because I think the proprietary data sets are really important. I think there's a better example of this in the medical industry, where if you think there are some technology companies in America that are buying hospital groups or buying hospital platforms, so they've got access to the training data, because big part of ML is it's only as good as its training data. They've got a massive differentiation there. So if you look at some of the big brokers or distribution insurance companies, if they go and then add value to their insurance groups, get access to their data and marry it up with the claims, they're going to have that proprietary data set. They're going to have the big difference. And then when they've got the technology as well that's trained and doing what we just talked about, eventually you're going to get to that inflection point across the whole portfolio. And I think once you get to that point, you're going to, you don't come back for it. Having said that, I think that's 10 years off. And I think that if you look at things that the CII have said and Capgemini have said and people like that there are lots of significant barriers between where we are now and getting there. So I believe they will be overcome, but the CII have said that there are biases in gender that you need to be aware of. I know there are lots of other biases on training data that come out. You need to be really careful that the model's not using data as a proxy for something else by mistake. So obviously the model's not doing that on purpose, but it could use certain data. There's a correlation between what you shouldn't be biased against and another part of the data set, and therefore you get the bias indirectly. I think Capgemini is quite rightly when it says that AI doesn't have common sense when it's applied in specific business cases, so therefore you can't remove humans from the process. Absolutely right. And that's where you come in, sir, and add loads of value. And I think that's really important. And yes, I'm going round and round in circles, but there is a line from CII recently where they said there will be a bionic upgrade, that not 100% machine, but an inseparable blend of human and machine. And I thought that was a really good way of describing it.
Yeah, it's very true what you said. There's this let's say trigger point, or for the last couple of years AI has developed, but actually AI is just a technology. Doesn't even matter which technology. It's just self-learning systems is today what's driving a lot of change. Tomorrow it could be something else or in addition. But the truth is that first, and today mostly, it's still looked at from a scalability perspective. Like, you have a lot of repetitive tasks and so on. You can parallelize them and have them done by a computer. And in a lot of cases, it's not even AI, right? It's just simple rule-based systems or other. But now also with the release of ChatGPT, which is more or less like a gimmicky platform to play around with an incredible capability, people starting to realize it's not limited to repeatable steps in a process. Like, an algorithm is not just good for that, but it's an incredible knowledge base that a human or a collection of humans would never be able to mimic. So it's, if you talk about decision making and you can tap into the biggest brain being a dump of Wikipedia or whatever, it's always going to be superior somehow. So it's even, I mean, I've been working in AI for a while, and it's very challenging to try to comprehend what exactly is possible and how this would translate to practical applications such as insurance processes. But we're gonna get there, and I'm not even sure if it's gonna take 10 years, at least not for the actual understanding of what is possible. The realization is something completely different, because as you mentioned, like, there are many hurdles to cross, and probably one of the biggest hurdles is access to data, access to qualitative data, to reliable data. And it's only becoming more apparent that data is indeed the new gold. So people are becoming very protective of that. And the ones who succeed in aggregating the most, as you mentioned, like buying hospitals purely for training data, it's something nobody would ever believe or even think of 10 years ago. But now I'm not even surprised. But I'm really curious to see how this will play out in the insurance field, where there are many different actors on different levels, but generally there's a lot of defense against who gets access to what and who gets to see what and what can it be used for. So you're going to need somehow look like a centralized player, or I don't know. Maybe that's where my imagination stops.
No, I think your point's absolutely right. I'm thinking of we're talking about Game Boys at the moment, aren't we? We're saying you can have a device, you can hold it in your hand, you can play around with it. And the Game Boys, fast forward to PS5s and virtual reality and stuff like that, it doesn't happen overnight, but once you've started to open the door to that technology, it's going to continually evolve. So I think the chat GPTs are really exciting. I've seen loads of people, even at our company, sending messages to each other saying, look at the conversation I've had, look at the responses that's come out with. And I think that opens a lot of people's eyes. I think if you think of the mainstream people that work in insurance on a day-to-day basis, though, I think they need to see it applied to their use cases. I think they become true believers when somebody can walk into them and say, here is a complicated commercial insurance product. We've put the submission has been received, and this is the decision. And they say, well, I need to get into the nitty gritty and the nuts and bolts of what's happened. And I think they see it happening, but I think they also realize that there are certain things that, because you experience them every day, you assign a larger amount of importance to them. So I think an example of that is when people have to go through a PDF and extract information. So does it have a sanction clause, and does that sanction clause apply to X, Y, and Z, and does it have a sublimit, and what are the sublimits and what do they apply to? And then they look at different clauses, and it is a very complicated process, and I'm very sympathetic to people thinking that won't go away. And I don't think it will go away for a long time, but eventually it will, because you're talking about that technology getting better and better. Eventually the contract won't get made. So I'm not going to make a guess at what time point that will be, but a contract won't get made in a standard PDF format. There will be structured data points. So if you think there will be an asset repository at a company that lists all of the characteristics of everything they want to insure, they will share that via API with their broker that will add loads of value in analysis and contextualization that will then share that with API via API to an entity that makes a decision on how to price that or whether to accept the price that's been provided into its portfolio. At that point, you apply terms, but you apply terms as structured data points. You want to call it a smart contract or I don't think it's just a contract with digitized data points that are structured, and you can make a decision. So you've removed the requirement for a negotiation around these are the coverages I want and don't want that then gets reflected in a contract. You might still have that negotiation, and again, this is coming back to relationships. I trust broker X to ensure that X, Y, and Z is in that contract and in the contract, and I'm covered for these certain things. But then that's not put into a contract that's shared with an underwriting entity that then needs to put that into a system. So you kind of remove those parts of the process. And I know, because I've had these conversations with people in the insurance industry that just say you're barking mad. That is never going to happen. And I think this is coming back to what we were discussing at the start. It's not going to happen now, and you cannot operate in today's landscape like that. But it will happen eventually.
It will happen, and it's a lack of imagination, if you ask me. So a couple of years ago, 2 years, 3 years ago, I was reading a paper about AGI, artificial general intelligence. The paper was shared among colleagues. Geek discussion started, and you have these researchers predicting, and I think they redo it every year. Researchers predicting in how many years humanity will have reached, or technology will have reached AGI, meaning like a general intelligent agent who is able to know everything and do nearly everything, meaning that 80% of jobs can be done by an AI, right? So I was always like, yeah, I don't buy it. I mean, some jobs for sure, but I don't buy it. And then other colleagues were like, yeah, I don't know, talking about data and things. And for me, that was at that point, it was lack of imagination. Now ChatGPT released, and you're like, it's shoved in your face capabilities beyond your imagination, and you're like, oh wow, this is interesting. I have to kind of reset my frame of belief of what is possible. And if somebody tells you like, yeah, my job, this is never possible to automate, or this or that, 1 out of 2 times, to me, it's probably a lack of imagination. And of course, you can't blame them. But it doesn't mean that from one day to the other they're swapped out of their job, right? It's by the time it's automated, if you have just the slightest bit of creativity in yourself, you'll be doing something different, and you evolve along. And quite frankly, I think it's even necessary. This change is necessary because the world is becoming more complex. People are becoming smarter. It's more difficult to find people. Like, war for talent is raging on. Costs are increasing, so we have to fall back on augmented systems, augmented processes, intelligent decision making, and so on, in order to keep our jobs. And I think this paradox, or this frame of mind, is going to evolve. But it's going to take whatever time is needed. Like you say, 10 years. It could be faster. It could be longer. Very hard to say.
Yeah, and when I say 10 years, I don't think it's going to take 10 years for the deployment of this technology. I'm thinking 10 years is the ubiquitous execution of the process by technology, and the humans doing less and less, to the point where the humans aren't making more of the underwriting decisions. It's quite, but kind of when you were talking, it reminded me of somebody that I saw the other day talking about ChatGPT, and there were a university professors saying, well, I'm not sure that these essays, like, there will be enough difference in the essays that I won't know, and when I will really be able to tell the difference in whether someone studied it or not, etc., etc. And they flipped it on the head and got the ChatGPT to mark the papers, so they're doing the professor's job. And when it did it really well, I think the professors then realised, oh yes, I am a little bit scuppered there. But even in that use case, you've got kind of, well, what's the value of the professor? Is instilling the value in the human and doing research that furthers their field, and they're still going to be absolutely vital to that. That's probably in a similar way to insurance, is the technology is shining a light on things that are not very valuable. And I don't think exams are very valuable or essays are very valuable. I don't know the answer. I know nothing about academia, so I'm not going to go down that rabbit hole. But if you come back to insurance, there are lots and lots of parts of the process that are not very valuable, and humans should not be doing anyway.
No, indeed, we should use the magical thing that is in our head to create new ideas, which is most fun. And imagine if you can create all the ideas and you don't have to execute. How cool is that?
I mean, that sounds paradoxical to everything that I've believed so far, in that ideas are easy and execution's the hard bit. But if you're going to flip that on its head, then yeah, I suppose that's the way to flummox entrepreneurs.
How did I'm curious, like how did ChatGPT, so it was released, you played around with it, you got a feeling for yourself. How did it impact you? Like how did it impact you in your vision of artificial, or how you look at your own job? Because you must have made the reflection like, is this going to change my job too?
Oh, absolutely. And I think just because of my natural disposition to worrying, I think Chat GPT means that the barriers to deploying ML in the insurance space is reduced. Not using Chat GPT specifically, but when they bring out, OpenAI bring out 4, and when more people get the models and I think this is a way to kind of leap over the top of loads of technology barriers, and that is a good thing for the industry. But then that's just another thing of we need to make sure we are very much across those developments at the forefront, and I believe we are. But I believe we are because David King and everybody else at Artificial wakes up in the morning and thinks, how are we going to be the best in this space every day? And so when I saw it, and because we knew it was possible, but we've been applying similar techniques to different things. And I'm not pretending that we're competing with OpenAI. But we are using ML models in different spaces. And I saw that and thought the applications to insurance here are fantastic. And if you've got the training data, you should be able to do it relatively swiftly. So we need to be across that and making sure that we understand what that means. What models should you use? And I don't work in the data science team, but very much excited to talk to them about this and how we leverage that.
Yeah, really cool. So you talked about biases being introduced in algorithms, which can impact decision making, which is a really important topic as we are moving along this technology development cycle. But if you would have to summarize, when is an algorithm not appropriate for decision making, in your opinion? And you could apply it to insurance or in general.
I think at the moment, the algorithm's decision making needs to be separated from, so the analysis that comes up with what decisions should be made needs to be separated from the decisions that are made on a day-to-day basis. And so by that I mean, if you deploy augmented underwriting and you have a human at the end of the process that says yes, no, yes, no, yes, no, maybe at a portfolio level, but they can be doing it on individual cases as well. When I say I do not think they should be getting involved in the nuances. I think they should say, this is the assessment that the algorithm has made, yes, no, in line with the parameters that we have set as an organization, human-led. You do that at scale and you structure and digitize all of the data that's flowing through that process. You then have a treasure trove of data that you can then analyze. You then use whichever method you want to get the insight out of that. What's driving profitability? What factors should you be concerned with, etc. And then you take that analysis, approve it through a change control process to go into the algorithm that's then making the decisions. What I think is not appropriate is that you allow the machine to make its own inferences on what's driving profitability and then feed it back into decision making without that change control process for approval. Now, I think you don't do that in commercial insurance because it can come up with something that the data that is available to it says do it, but actually when a human looks at it, they say this is an awful idea. That might be from an ESG perspective. It might decide that X, Y, and Z, because of price moves in the market, is super profitable, but from an ESG perspective, it's awful. So you might then say, well, I will make the ESG data available to it, and it won't make that mistake again. But I think you need to have the human to ensure that the training data that it's making those decisions on are complete enough for it to be effective and accurate. I think that's different in personal insurance, in that you need to be for this. So that same process is valid for personal insurance, but then I think that the data that it's training on and making the decisions could be proxying bad things. So the gender bias that we mentioned earlier, it could be making a decision based on a data point that's completely correlated with gender. So therefore, it decides men should pay or women should pay 35% more on a premium that's just completely not right or fair, and in some cases illegal. And I think that the change control process being in place should stop that from happening.
So while in general, I definitely agree with your point. I was just realizing it's interesting if you look at it that way. You build an algorithm to make an as unbiased and objective data-driven decision as possible, to then decide a human should make the final call, reintroducing human bias to the system. Which in some cases could be positive bias, right? But it's still like bias, and it's still very difficult to filter, because you could, for example, try to assess to what extent do we have gender bias in our computer system, but you can't do that for a human.
No, and you're right. I'm thinking more of you have to operate in the context of what's allowed, and that this comes back to your kind of general AI, the common sense approach to things, the training data, the technology, the AI, the ML isn't good enough to understand everything yet. So there is not training data for some of the things that you've just mentioned, or won't be available to it. So whilst it's making completely unbiased decisions, in reality, some of those might be illegal. So I think you can't completely remove the human just yet. Eventually, I think.
And in the end, it's also about responsibility and accountability, right? You can't. It's just simpler if you don't have to pull your AI in front of court. If you have a human that is responsible, but anyway, we're getting sidetracked a bit. You know what I'd love? If we do this conversation again in a few years from now and see how our predictions are landing, or how the work looks like at that time. I think that could be really cool.
That'd be an absolute pleasure.
It's been wonderful, David. Thank you so much for making some time to chat with me this morning. It's been lovely.
Thank you very much for having me.
Talk to you later.